Please be advised today's presentation is being recorded. Good morning and welcome to CHZ Resources Diamba Sud Scoping Study presentation. Mr. Andrew Grove, Managing Director and CEO of CHZ Resources, is in Sydney this morning and will be running through the Scoping Study presentation released this morning on the ASX. Following the presentation, there will be a question and answer session. All participants will be muted for the duration of the presentation. At the end of the presentation, participants will have the opportunity to ask questions either by typing a question in the chat or by using the raise your hand function. On that note, I'd like to welcome the Managing Director and CEO of CHZ Resources, Mr. Andrew Grove, to begin his presentation. Andrew, over to you.
Thank you and welcome. We are very pleased today to present to you the results of our scoping study over the Diamba Sud Gold Project in eastern Senegal, and that was released in the ASX yesterday. It's good timing because I've just got back from nearly 4 weeks in Senegal, and you know, the scoping study results are excellent, but we are very excited about the growth potential in our resources and our exploration in the area. Let's go through the disclaimer. So in summary, CHZ is a Senegal-focused gold explorer and potential future gold producer. We have multiple high-grade deposits at our Diamba Sud project, which is located over a very highly prospective Senegal-Mali shear zone geology that hosts nearby world-class ore bodies, including Loulou, Gonkoro, and Fekola. Modern exploration on the Senegal side of that sequence has been very new and has already delivered multiple discoveries, both on our tenement and in the Barracks neighbouring tenement. The high-grade mineralisation was only discovered in mid-2020 at Area D. From then, we delivered our maiden resource estimate over areas A and D of 780,000 ounces, which is the basis for this scoping study. The results of which are an impressive almost $20 million post-tax NPV in Australian dollars, and I only mention the Australian dollar number because it's quite relevant to the scale, relevant to our scale of our market capitalisation. So it's almost 4 to 8 times our market capitalisation. So we can see there's a fair amount of value to be had from a re-rating of our stock up towards a valuation. So the IRR of 59% and importantly, a very rapid payback of only 15 months at an $1,800 gold price. And importantly, what we'll focus on a bit today is that this is only the start and it's going to grow. We've made a new discovery in December last year at KARAKARA, or Area H, which is within 1.2 kilometres of the resource areas. And we're currently drilling there right now. So we expect strong news flow and expect to add that to the resource inventory in this year as well. So, outside of that, there's plenty of upside on the remainder of the tenement. And Senegal is a very stable democracy, very mining friendly and quite safe. So we're happy to be there. Okay. Now let's look at the details of the scoping study. The study demonstrates there is a simple, high-value, low-risk gold mine that can be developed at Diamba Sud. The study shows a 7.5-year mine life producing 700,000 ounces at a low all-in sustaining cost of $820 an ounce from 3 open-pit mines. The first 2 years are particularly strong and produce 240,000 ounces at an average all-in sustaining cost of $545 an ounce. And that's mainly from the Area D oxide pit. The mining inventory of 750,000 ounces comes from 70% of indicated material, and it's a fairly significant, it's a 96% conversion from our resource. And there's a low strip ratio, which feeds into the low costs, 2.8 life of mine and 1.9 in the first couple of years. And we've based the scoping study on an industry standard 2.2 million tonne CIL processing plant with an average recovery of 94%, although our test work's indicating slightly higher, and pre-production development capital of almost $160 million. That includes 20% of contingency in there. We'll go through that in a bit more detail on a few further slides. So these metrics feed into the very strong economics of the project. Post-tax NPV of US $300 million, strong IRRs, rapid payback, strong net cash flows of $400 million over the mine life, all of which will lead itself to conventional debt financing at the time we get to go and build this project. So this is only the beginning. We're very confident that we're going to grow the resource base quite strongly, and I'll spend a bit of time in later slides on this. But we've got an extensive drill program underway at KARAKARA, or Area H on that screen. That drill program will move up to areas A and D to extend resources there and test a number of the high prospective targets on the tenement. There's also a number of opportunities to improve the economic metrics of the project. On a technical side, we talked about the recovery being a bit more conservative than the test work. The processing route was designed on a 75 micron because that's all the test work was done at this stage. But given the rapid leach kinetics and other favourable aspects of the mineralisation, we think that coarsening the grind size will either improve the throughput rate or lower operating capital costs. And there's a number of other studies to be done on bringing high grades forward and looking at the loss and dilution assumptions. The scoping study was put together by CHZ, but with the inputs of some very high quality consultants with significant experience in West Africa and on these sort of projects. So we thank those guys for their valuable input. If we just recap on the maiden resource, it's only over area A and D. It's got a number of attributes, and part of the reason for us wanting to do the scoping study is that we saw these attributes of the resource having a large high-grade component, being shallow, large percentage of oxide, being very positive attributes of that resource that will feed into a very economic study. And as you can see on the screen, there's the +2 gram blocks, and the high grade largely forms as very contiguous, large areas of high grade, which sort of lowers the mining risk. And we think there's some quite strong growth potential on this resource, and we've managed to deliver this resource on a fairly economical $11 an ounce. If we look at the project outlay, that will change over time as we go down the further studies. But importantly, it's well positioned for mine development. It's close to the national highway that connects Senegal with Mali, and it's a sealed road. We're within 7 kilometres of the Falimi River, so a potential water source to the processing. You can see actually on the bottom right-hand corner the Gonkoto mine over the border in Mali. That's just 7 kilometres away from our project. There's no people living on the site, very little land use. It's a big laterite covered area that doesn't support much land use. And we've commenced sort of environmental ESI baseline work to get ourselves in a position that we can go and license this project. And we've talked about the metallurgy. We've got a very supportive local community and government. We've got a formal agreement with our local community, and we've been engaging with those on that formal basis for the last couple of years. And they're very supportive of what we're trying to do on site. We need that for going forward. Let's touch on these. This is mining and gold production metrics. The most important part of these is the first 2 years of production, which largely comes from the Area D pit. We generate over 100,000 ounces a year at that very low cost of $545 an ounce. Mostly oxide, but as a life of mine project average, we're still producing just under 100,000 ounces a year. We think that maybe if we can increase resource base, then we could look at scaling up that project a bit and definitely hitting the plus 100,000 ounces a year production target. It's a scoping study, plus or minus 35% level of accuracy, but importantly, particularly for the capital and operating costs for the mill, it is based off a recent comparable DFS in West Africa that eventually went into construction and operation. So we're getting a better product than we would normally have at this point in the study phase. Total capital of 182 million, and that includes sustaining capital and closure costs. There's a pre-production, or I should mention on another page, there's a pre-production mining period of about 8 months, and there's a development period of 15 to 21 months. We base the economics on a 15-month development period. The low operating costs are really driven by the low strip ratio, high recoveries and grade. Now, if we look at the sensitivities, these are important. As for all gold mines, they're most sensitive to the revenue line. But this is important because this is a good proxy to the extra value we can add by adding mining inventory to this project. We believe we can add significant mining inventory through exploration, and particularly the new discovery at KARAKARA. But you can see the massive positive impact that additional ounces into this mining inventory would have on the project. And importantly, in this part of the world, or everywhere actually, is maintaining a social licence and mutual benefit. The government should receive some significant tax and royalty benefits out of this project. They do have a 10% free carried interest that the project is modelled on a 100% basis, but we can deliver long-term employment and infrastructure. We've allocated a reasonable royalty to our regional development fund that will go into place and benefit the local and regional areas. And we do have a supporting local government and community. And significantly for shareholders, there's a significant value upside to our stock once we re-rate to better reflect the value of the scoping study and what our future growth potential is. So if we look at the exploration and growth potential, this image here is gold anomaly in soils, or not in soils, in auger drilling. The red blobs are Barrick's gold in auger anomaly. There was very little exploration until sort of CHZ did some auger drilling in 2018 and defined a very regionally significant anomalous system. Barrick subsequently went through and did the same. So what we've defined together is a regionally significant 15 by 15 kilometre anomalous gold system, and it's really only had RC and diamond drilling in the last 3 years. And in that last 3 years, we've been very successful in delineating discoveries of economic mineralisation at our area A and D, and subsequently we will put resources around KARAKARA area H. Barrick have identified an emerging discovery at KB West, just a few kilometres from our tenement boundary. And if you can blow up that image a little bit, there's little black dots, the drilling, and there's very little drilling outside those main prospects. And there's a lot of anomalies. There's quite significant artisanal activities to the south on the Western Splay and south of the Southern Arc area. So there's a lot of gold in the area, and we've only just started looking for it. But we've got a 15 to 20,000 metre drill program underway that, the aim of which is to, significantly expand our resources. We will add resources at area H and KARAKARA this year. We should expand area D and A. We're going to look at the anomalies in the northeast of area A on trend to KB West, and look at the southern extent of area A and a northerly plunge proposition at area A as well. All of which I think, will add resources, but also could make exciting new discoveries that can materially change the resource inventory. And so, look, I think the message is that while the scoping study results are excellent, they're just going to get better if we find more mineralisation. We quickly look at some of the areas. This is area H, or KARAKARA. It's the discovery we made in December last year. We've defined mineralisation over 125 metres on 25 metre space lines, open along strike and at depth. Quite high grade and near surface, the intercepts at this stage. The average intercept grade is about 3.5 grams per tonne. That trends into a fairly significant artisanal working area. They've since moved on, and we're filling that area in, but certainly shows there can be some significant strike extent to that mineralisation, and we're getting some very interesting results. The first batch of the assays are due to leave very soon, and we expect a steady flow of news flow from this drilling starting early next quarter, and we expect to add this area to our reserve inventory during the year. Just a quick recap on Area H. This is driving the first 2 years of cash flow. Thick, high-grade oxide, supergene oxide blanket starts at sort of 10 metres from surface and is about 20 to 40 metres thick, free dig, and does repays all our capital and then some. Area A, the areas are structurally very complicated, so it's not simple to find more mineralisation, but we are doing so. We've defined a horizontal high-grade lode at the intercept point of favourable rock units in a structure over 250 metres. You can see that on these couple of structures. These are open to particularly to the north, northwest and southeast. We undertook a structural study late last year that indicates there's a plunge to the north and to the south. We're putting some deep drilling to the north and south to test that model. Interestingly, Barrick at their KB West prospect are also theorising a northerly plunge to their mineralisation that looks very similar to this, and it's a very similar setting. So I think we're both on the right track, and if we can extend that mineralisation or find repeats of that mineralisation, it has a significant increase in our resource base. Quick snapshot. In country, we're well looked after by Gareth O'Donovan and Boubacar Tierra. Gareth's an exploration manager. He basically lives in Dakar. He worked in this area in the early 90s for Anglo American. Boubacar was intimately involved in the development, approvals and licensing of the Mako Gold project in the country. The board's led by Mark Connolly, West African stalwart, was also involved in Mako over the border at Fekola and with WAF more recently. The market cap's up a little bit since the announcement of the scoping study results in a pretty hard market. Cash balance is sitting at $5.5 million at the end of the year, and it's our share chart. So we hope to see a reversal in that trend as we re-rate to reflect the value that we're presenting in this scoping study and the potential value that we can deliver from further exploration. So in summary, CHZ has delivered a lot in a very short period, from discovery of mineralisation in mid-2020, delivery of the maiden resource estimate in November last year, which feeds into this scoping study, which is very excellent results and sets the base for the company going forward. We think it is only the start. We think we can deliver a lot more ounces particularly immediately through our new discovery at KARAKARA, where we're drilling currently, and we'll undertake a resource estimate during the year. But I think the region and the area and our tenements have a lot more to give. We've only just started really exploring those areas, and what little bit of work we've done has come up with some very good results. So we expect to be seeing gold discoveries in this area for a long time into the future. Internally, we've got a bit of a target to deliver plus 1 million ounces into a mining inventory this year. The exploration team on site, I think they can deliver that. And importantly for shareholders, I think there's an obvious re-rate in value from where we're sitting to what the inherent value of the project currently stands at, and we'll be supporting that by strong news flow from drilling, resource upgrades, and in reality, there's a future highly profitable gold mine to be developed on this site. So thank you for your time, and I'll hand it back to the moderator for some questions.
Thank you, Andrew. As a reminder, participants may now ask questions either by typing the question in chat or by raising your hand. If you've raised your hand and you're unmuted to ask your question, you'll remain unmuted in case you have a follow-up question. Please ensure you introduce yourself before asking your question. And we'll open the line up for questions now. The first question comes from Ryan Armstrong at Taylor Collinson. Go ahead, Ryan.
Yeah, hi, Andrew. Just really quickly with regards to the resource upgrade and where you think that can go with regards to the 1 million ounces. I mean, progression study-wise, I mean, in the background, you're going to be continuing along those lines and incorporating, I suppose, that exploration success that we foresee, I suppose, at KARAKARA and beyond, and really moulding what that final sort of production profile will look like.
Yeah, no, that's right. We're, the board's approved our progression directly to the DFS, skipping this preliminary study periods, because in reality the project's pretty simple technically and very robust. But we'll be doing that in the background and really strongly pushing the exploration and resource growth. So if we can manage enough resources in the period of the study, we can always look at rescaling the project to a slightly bigger project. Because in reality, we're not mining constrained in any way, shape or form. It's just having enough mine life to justify increasing the plant size, and that we sort of set it at 2 million tonnes per annum, because that was the basis of the resource we had at that point in time. And
the current pit scenarios or the optimised pits, I mean, is there any chance that they may drag further or at depth, or where do you sort of envisage that going, or you're sort of comfortable where it's at the moment and just working on additional open pit opportunities, keeping it simple?
Yeah, look, it depends on exploration, really. As I sort of mentioned, we're looking at sort of a north and a south plunge to the Area A mineralisation. If that comes to fruition with the drilling, then that'll obviously change the geometry and the shape of that pit. Area D, I think we've got more work and understanding to do, because what we've seen is high grade in the oxide, but we've seen some indications of high grade in the fresh, but we haven't seen the continuous high grade low development that we've seen in A, and I guess we're seeing it at KARAKARA. But it doesn't mean it's not there. It's going to need some more work to have a look at it. And any new areas will come in as separate open pits, obviously.
Right, great. And just one last query, just with regards to the metallurgy, you're seeing similar characteristics across the board at this point between the ore bodies? I mean, what's the... Well,
we've done a suite of 22 odd samples over Area A and Area D. We haven't done any over KARAKARA because we only just found it a few months ago. Both in oxide and fresh, and we're seeing very similar characteristics. You'd expect the oxide to behave similarly, but we're seeing very similar characteristics in the fresh between the various rock types. It's 95% recoveries in the fresh. The worst result we've got is sort of mid-80s. So it's looking pretty positive at this stage, but we've obviously got a lot more work to do on the metallurgy as we go into the study phase.
Terrific. Thanks, Andrew.
Thanks, Ryan. And we'll now open the line up again for any further questions.
I think there's a couple on the chat line from Michael and Christian. I think Michael said when the DFS start and how long. So we're starting. We intend to start the DFS in short order. We've budgeted sort of 18 months to 24 months to get through the whole DFS environmental baseline, licensing and approval phases. So, our aim is within 18 to 24 months is to have investment ready projects. I mean, fully licensed, fully approved, fully DFS'd, and some funding discussions in the background. So we can then make a financial investment decision at that point. There's one other question about drilling for the DFS and deeper drilling in Area D. So look, for the DFS drilling, obviously at some point we'll have to do infill drilling to upgrade the indicated inferred mineralisation, which isn't a lot of the whole thing, into more higher categories. There's obviously a lot of sterilisation drilling to be done over the infrastructure when we finalise the locations for those. There's a fair bit of metallurgy and geotech drilling to be done, and we'll start some of that before the end of this field season, which ends at the end of June, early July. And area D, look, I think we do want to do some deeper drilling. We need to refine our understanding of the mineralisation controls. It's a little challenging because the structures are, where they intercept the favourable rock units, they're quite evident. There's brittle deformation, there's lots of sulphides, lots of alteration. But as they exit those favourable rock units, they're very, very hard to find. We haven't been able to see them. And it's a challenge to find out where that then intersects the next favourable position for the gold deposition. Interestingly, while we're in Senegal, we went did a bit of a tour and had a look at Massawa, Boto, and a fair bit of time on Barracks KB West. And while some of the structural settings are similar, particularly at Boto, I think that all of them exhibit strong structural controls that you can see in the core, the fabrication, fabric and things like that. So it's a little easier to follow. We're still working it out. It's early days. It's only been about 12 to 18 months we've had any diamond core to look at the geology, but I think we'll get there. And when we do get there, it could deliver a whole lot more ounces for us.
Great. Looks like there's no further questions on the line here, Andrew. Might hand over to you for closing remarks.
Okay, no, thank you. Thank you for your attendance. It's an exciting period for CHZ. We've made a good discovery, which obviously has significant economic value, and there's a potential gold mine on the project, which we believe we're going to grow substantially over the short period of time in the near future. And look, if anybody has any further questions, my contact details are on the releases, and please feel free to reach out and talk to me. Thank you.
Thank you, Andrew. Participants, that concludes today's presentation. A recording will be made available on the company's website in due course. You may now disconnect.